bring in Betsey Stevenson now, former member of the Council of Economic Advisors during the Obama administration. She's also a professor of public policy and economics at the University of Michigan. Okay, a lot of people's heads still spinning after what has happened over the last 72 hours. I think first and foremost, for a lot of people nationwide with money in the bank, their question, is my money safe? How do you answer that?
It's definitely safe. And that is what the Fed and Treasury and President Biden made clear when they stepped in to cover not just the insured deposits, which most people who have money in the bank, their money is insured and it's definitely safe. But they said, look, even if you have more money than is typically covered, that's that $250,000, we're going to cover the money that you had in the bank. Depositors are not going to lose here. And that is designed to make sure that everybody waking up today can think, my money is safe in the bank.
So let's rewind a little bit. A week ago, SVB had a stock price just under $300. How can a bank evaporate in less than a week? How does something like this happen?
Well, I think what we see with bank runs is it does happen that fast. A classic bank run occurs when people start to get scared that a bank is not going to be able to liquidate, not going to be able to provide the liquidity. In other words, if you go to the bank and you want your money right now, you want to believe that the bank can give it to you. Now, banks don't just sit there with all the money that depositors have put in a back room ready to deliver. They tend to use that money to make money, right? They make loans, they purchase assets like treasury bills. And so what happens is if too many people show up at once, they simply don't have the liquidity to meet those requests. And as you start to hear, oh, this bank might not be able to make the requests, you want to be at the front of the queue. You want to be able to get your money out because you need to make payroll. And what happened at the end of last week was we saw just a large number of the depositors show up and demand their money, trying to pull it out. And they couldn't provide those funds. And that's what a bank run is all about. It's really a liquidity crisis. And I think it's important to distinguish between a problem of liquidity, I can't provide you these funds, and a problem of solvency, actually, we've lost all your money. What we really saw here was an issue of liquidity, and that's what the Fed and Treasury is most worried about, is that we'll get these kind of bank runs happening at banks all across America as people try to pull their money out to make sure that they can get access to it.
And what the president said is the taxpayers aren't going to be on the hook for this. Depositors will essentially get their money back, but investors, you're going to be left with nothing, right? That's capitalism. That's the risk you take.
So I think that's a really important distinction. Who's being guaranteed here are the depositors, not the shareholders, not the CEO. And now somebody still has to make sure that we can get all the money back for the depositors. And when they liquidate the bank and calculate all their assets, the question will be, do they actually have enough? Is it the value there to actually cover the depositors? If it's not, then they're going to have to raise money some other way. And this is where it gets a little tricky because, President Biden is assuring that it's not coming from taxpayers. It'll come from a tax on the banking system. Of course, a tax revenue from the banking system could be used for all sorts of things. It's a little bit of a wordsmith game to say it's not coming from taxpayers. But I think what he's trying to really convey is that he's insuring the depositors, he's not insuring the investors.
Well, the other thing is accountability, and the president was pretty clear on that those responsible will be held accountable. What type of oversight and regulation do you expect? And were there warning signs that were missed or ignored?
Yeah, I think that is really where, once we get through this moment of crisis, we're going to come back and ask questions like, there has been a lot of rollback of some of the regulations that were put in after the 2008 financial crisis. That rollback happened during the Trump administration. And this really raises the question, do we have enough regulations in place to ensure that banks have enough liquidity that they're able to meet the demands for cash of their depositors in a way that makes it unlikely that they'll trigger a bank run? So I think you'll start to have some questions about what kind of regulations should small banks have? Should they be different than big banks? I mean, I don't know. I think most Americans have probably never heard of Silicon Valley Bank before this weekend. So I don't think we call that too big to fail. It just turns out that really any banking collapse is a problem. And for me, that says that we need to think about regulation on all size banks and not go easier on the small banks, as happened with some of the rollbacks during the Trump administration.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.